the S&P is kind of 2/3 an AI ETF. You know, if you kind of look at how correlated electrification and power and
why we spend about 2/3 of our time talking about it here.
You should. Yeah, maybe 3/4. Yeah. So I think that if you don't get Goldilocks on that CapEx, meaning people need the CapEx to come up, son, to believe the return.
But we are getting it right now. You saw TSMC yesterday. Couldn't have been better than what anybody expected.
Most
52 to 56 billion above what had been expected and going up from there.
But if it's too hot, so the Goldilocks also means like Microsoft can't come on and say, we have negative free cash flow now. Because then people will be like, whoa, like, you know, let's. Right. So I think it's got to come up, but not so much. And Taiwan Semi, I think.
They don't, by the way.
Yeah.
Oracle does.
Yeah, Oracle does. Yeah. Look, I used to be a semis analyst for a long time. I followed Taiwan Semi for a quarter century. They're considered pretty sober. So I think people aren't as, pretty solid and probably the most important asset on earth, probably Taiwan Semi. So, like, I think people give them more credence than maybe other, than like Sam Altman or somebody else who maybe has a little less gravitas in the game.
So your recommendation is to do what?
As things go up, unlike in the previous 3 years, I find myself getting more cautious. Some of it's the sentiment we talked about.
Some people are worried what gold is signaling too.
I'll give you a risk thing that came up. Do you think gold is correlated to the AI trade? I do.
It appears to be now.
I do. I wouldn't have said that 2 years ago. So meaning like if you have a portfolio, you shorts diversifying, right? And so to me, I love the healthcare overweight. I've been pushing that. It's been wrong. Was wrong for the first 6 months of last year. It looks better recently, but I need stuff that is diversified where the estimates are achievable. Because the one thing I can measure carefully is the penalty for missing estimates is a lot harsher than the reward for beating. Estimates are high right now, 15 and change for this year, 30% earnings growth in tech. A lot of it's back half loaded. I suspect things are fine here, January and April, but the pressure mounts as we get into the second half of the year. Stocks are anticipatory. So the bear case is probably that, high expectations, everyone loves it, and missing is hurt. I think the Fed part probably isn't as helpful going forward, meaning do they cut the front end? Is it because things off to the moon, or is it like maybe they're only cutting from here more than 50 because things get bad? So I'm a little confused about how to interpret Fed, right? 3 years ago, okay, they're close to end of hiking, great, everything ripped in 2023, even though they were still hiking. It's 3 years later now, maybe like you're not as psyched if they keep cutting. So that's been, I would say, a lot of debate in my meetings of like, how much do I want the Fed to cut?
Although they cut 3 times, the insurance cuts were great for the market because they didn't need to, but they did.
The part that I won't ever fight is if they do balance sheet expansion, right? So when they talk about the GSEs doing what they say, 200 billion of MBS, like we learned last time, like when they do that, like those things go up, right? And you see it from even, I would say, like tangentially exposed Lowe's and Home Depot and other stuff. But look at like Floor & Decor and restoration, like anything with housing is ripping, and I do not think you will see that fundamentally come through in February and March or whatever. So that's the thing. It's like companies, software killed, the earnings aren't going to be that bad. Bad consumer ripping, the earnings aren't going to be that good. And so you try to timing when I should kind of close the gap on that. That's where my head is. I'm trying to think through that. But I think things are fine now. Risk taking is fine, and I like healthcare because I know it's diversifying, and so I'm sticking with that theme in most of my meetings.